Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, I did finish the week with 13 wins and 3 losses for a win rate of 81.25%. So kind of below my 85% weekly goal. It was a short week. For some reason, short weeks I just don't do very well. But I had a day where I just, no matter what I did, I just was on the wrong side of it. But we'll get into that. I think that was Wednesday. So trade ideas on Tuesday, because Monday market was closed. We had SPY puts under 437, which was right here. I rounded down. Did I round down? Yeah, I rounded down to the whole number. So that's what I did right there. And first candle was green. First trade was SPY put, SPX puts under at 942, which is right here, 942. So I must have grabbed it. Didn't wait for the actual lower data candle. Looks like I got it right here, right underneath the body of this candle and the body of this candle. That's where I grabbed it. I grabbed the 43.90 puts at 780, and they went from 780 to 1060. And that drop right there. And then I took calls at 11, which was right here. Now I see where I took it here. We get these exaggerated candles right here. I was probably looking for an FU setup right here, which means when you have these big red candles right down here, you look for a green candle that gives us a little bit of hope that there's a reversal, and they just end up dumping it more, but they didn't. They ended up actually popping it. So I had a nice green candle again right there. Then a red one, and I like the top of this candle and this candle. These two candles together were right side by side. I kind of liked it. If it broke out over these two candles over the 436 area, I was taking calls, and that's what I did. So I grabbed the 43.80 calls at 640, and they went from 640 to 740. So I got a dollar move out of that. Then I took calls again at 114, which is probably right. No, I didn't take it right there. I probably took that in the challenge, maybe. I don't know, but I definitely should have taken that one right there. I don't cover the challenge or the IRAs and the recaps because it's just too much video, too much to do, and I'm just not going to do that. That's just recaps. These recaps only cover the options trades in the subs room, and this just gives you an idea. I do the videos to give you guys an idea of what I'm thinking, what I'm looking at, and stuff like that. So going over every trade on all accounts is just way too much. I spend hours, and I don't want to do that. And you know, these take a long time. Just the subs options trading recaps take some time, and they don't get that many views. Not too many people are watching them. Kind of sometimes it feels like I'm just wasting my time making these videos, but I know that to the few people that do watch it, it does help them out greatly, and that's why I continue to do them. I just wish that more people would actually pay attention to them. That's how you learn. Most people are just more worried about just getting the actual play than actually learning and taking something away, because I'm not going to be around forever. I mean, anything can happen at any point in time in life, and you just gotta start to learn what I'm doing, so that way you're set up for the long run and the long haul, because that's just the way things are. Life is unpredictable. Anything can happen at any time. So just gotta start watching these videos and start learning, because it's the only way you're gonna get better. So I took calls at 114. So I must have taken it right here. Yeah, that's what I did. Okay, you get higher day over here. You get these candles right here. It kind of rejected higher day, sort of right around the 438 level. It rejected. It pulled back. So once it came back up to this area again, I grabbed calls. I didn't want to chase this. even though me buying up here is chasing, but to me it's not, because you get all these green candles. If you were to buy up here thinking for a higher day break up here, that'd be considered chasing, because you don't have any pullbacks whatsoever. Now we have two red candles, we get a little bit of a pullback, we get some exhaustion coming in, we get some relief coming in. If it was just to continue going with no red candles, I would not have taken it. But because we have a couple red candles, a little bit of a pullback, I'm more comfortable buying up here. So that's why I grabbed the 43.95 calls at 580, and then went from 580 to 870 in that pop right there. So the only reason I took it was because of these two red candles. Even if it wasn't just two, even if it was one, I would have taken it. I don't want to go buy calls after these massive green candles and keep going, because it's not going to go forever. That's how they end up tricking and trapping you. Then I took puts at 304, which is probably right here. No, 304. Right here? No. No. Right here. Okay, I kind of see why I took it here. I could see why I would have taken it here too. You got the drop, 20 EMAs right here, this blue line. It bounced off. It didn't make a new higher day. In fact, it rejected the 438 again. So I could have bought puts right here underneath the 437.40 area. I didn't. I waited for over here. It bounced off the 20 EMA a little bit, put it in the lower high, and that's where I grabbed it. I grabbed it right underneath the 437.40 area. I grabbed the 43.90 puts at 250, and they went from 250 to 330. Not much of a play. Got a little bit of a play, but I took it and ended up leaving. The end of the day plays have been ridiculous. You just don't get much movement. You have to time them perfectly, and even if you time them perfectly, they're just very difficult to get. So end of the day has not been my favorite lately. They used to be. I used to love end of the day plays. You used to get massive moves, but lately it's just a pin job. Makes it very, very difficult to play. So now on the Wednesday, this is the day I kind of stumbled a little bit. I didn't take any losses on Monday, right? No, this Tuesday was my first two losses, and this was very, very frustrating. Traded Ears Room, 21st buy puts in the 435, which is right here. I rounded down. Did I round down, or was there another area from before? 435, which was the lower day of the previous day. Yeah, that's why I picked that number, and to be the next round number is definitely worth looking at. So I took puts at 940. You get the first 10-minute candle, which was a red candle. Blow it up, red candle, and I was looking at the downside anyway. So when I broke below lower day right here, which was 435.40. I got the 43.65 puts at $7, and they went from $7 to $11.40 right there. So that ended up being a good play. Then it popped up. Then it made a lower high. So I grabbed calls right here. No, calls, puts. No, I grabbed calls at 11:01. 11:01. Okay, that's 10:50. So I grabbed it right here. I grabbed it right at the top of this. 11:01. Why did I grab calls? Okay, it opened here and it closed down here. It opened here. Okay, so 11. Oh, okay. I'm having a brain fart here. Yeah, it opened here and it started to go up. So I got prematurely grabbed it at the 435.50 area, thinking it was going to break over this, but it didn't. Not yet, anyways. So I had the 43.70 calls at 880, and it dumped, and I cut them at 5. Then I grabbed puts down here because it failed to break over the 20 EMA, and it came back down to the lower day really quickly. I see it opened and it just came down quickly, so I grabbed the 43.60 puts. I switched sides at $7. The 43.60 puts at $7. Then it popped on me right after I got it. Literally, I got calls here. It dropped on me, went against me. Then I got puts down here. Then it went against me. And I was just like, okay, I'm not going to chase both sides of this direction. One of the directions is going to end up panning out. And of course, it was the calls direction that ended up working out. They went green. I wasn't happy about that. Then I added more. I just waited, thinking, okay, we're going to stay within the range, and which we did. I probably shouldn't have waited as long as I did, but I did add at $3 at 101, which was right here. Didn't break out over high a day, so I was kind of still okay with holding it. I just didn't. I don't think I had that much. I think I had like 5, and I added like 15, if I remember correctly. And when it rejected high a day and it came back down, it broke below this 435-ish area, 435.10. That's where I ended up added more at 3, and my new average was 4, and then it just popped, and then I just ended up cutting it. So it just didn't work out. I thought for sure, because it broke, failed to break high a day, and it came down quickly through VWAP. We were going to go back down here, and I averaged down right here because thinking we were going to stay in this range, because we didn't break out of the bottom range right here. Got bought up, but yeah, we didn't break high a day. So I didn't want to average down here, because if we stayed in the range, it would have ended up being a loss. So because we had all these candles right here, right around the VWAP area, right around the 435.20 area, 15.25 area, right in this area, when it broke below this area, that's when I decided to average down, giving myself more room that if it did go down to low a day, that I would have enough to get out and have a nice potential win. And we have a little downside for cushion right here, but it just didn't. It just got bought up and it just took off. So I was like, okay, whatever. Then I did end up taking puts at 330, which was right here. This candle right here. Where did I take it? For some reason, I think I want to say I took it at VWAP, but I think I actually took it right down here at the 435.15 area. I think this is where I ended up taking it. I took the 43.75 puts at 330, and they went from 330 to 11. No, I've had to take it up here. I probably took it up here at the 436 or the 435.80 area. Okay, for some reason I thought I took it down here, but if I go to the 330 and they went from 330 to 1110, that had to have been this candle right here, because they wouldn't have gone 200% from 435 to 4 to that. None of them wouldn't have gone 200% in a $25 move, 25-cent move. Even if it was at the money or in the money. No, this definitely makes more sense right here. That's almost a dollar move. That would have been a 200% move. So yeah, I think I took it right here, right around the 435.80 areas where I took it. And then, like I said, they went from 330 to 1110. So they went a 200% move right there. Caught that play. So that ended up being a good play. Kind of a small red day, but the end of the day play definitely recovered a lot of my losses. This just was a nightmare. We used to have these all the time. I remember months ago, or a couple months ago, where I wouldn't trade the first half an hour or even hour, because we would have stuff like this in the first 30 minutes of the day. We'd fake out, then it would drop to me another fake out. I remember we used to have 2 fake outs in the morning. And if you've been in the room for a couple months, you know, like we were talking about this all the time, that you could literally count the fake outs and you could play after the second fake out happened. It was just crazy how the market was doing that. So just made some bad decisions right here. But I get why I did it though. Calls, I probably shouldn't have taken the call side on that because of the reject on the 20 EMA. But down here, I would have taken this again and again and again, because I didn't make made a lower high, and it tried to break that lower high, and it couldn't have got slammed on immediately. And to me, when that happens, I would have taken puts. I would have done that play over and over and over. So that play was definitely one I would have taken regardless. The call side was definitely a little, I was premature in grabbing that. I probably could have avoided that loss. But sometimes you just anticipate a breakout that's going to be a strong breakout, and you get it right before the breakout, and sometimes it just backfires on you. I mean, that's just trading. I mean, you either chase the massive move and you get screwed on it, or sometimes you anticipate it and you can get screwed that way too. So I mean, that's just part of trading. I mean, there's no surefire way in trading. No perfect indicator, no perfect setup. Every indicator, every scenario is going to be flawed. It's not going to be perfect 100% of the time. Just going to make good decisions and try to avoid as much as possible. Sometimes the market gets so trappy that you wait for the perfect play, the perfect setup, and wait for everything to line up and be perfect, and it could still just not work out. So trade today's room on the 22nd, which is Thursday. SPY calls over 434.50, which is right here, the pre-market high. First 10-minute candle's red. Still looking at the call side because you get the RCT trend line up here. I kind of like the direction. Like I'm more of like a directional kind of trader, where if its SPY is above it quite a bit, I start looking at the short side. So that's why when it's like up here and you get this massive difference between price and the RCT trend line, I'm more or less trying to look at the downside because I know it's going to get pulled to it eventually. So that's why I do what I do, and that's why I was looking at calls, was because of that a little bit. But definitely looking at calls, definitely more on this because we're getting some distance, and plus I believe this was the first red day, I think, that it opened down. Yeah, it gapped down a little bit. So when it opens red, I start looking at the call side because when things open red, it ends up taking off at popping it open. So I've just been doing that a lot lately. So I took calls at 9:45, right over higher day on this candle. First candle's right there. Second candle, as soon as it broke at that higher day on the first candle, I took 43.60 calls at $8, and then you went from $8 to $12.70. So that ended up being a good play. Then I took puts at 10.41, which is right here. I get why I took it here. We get this. This is a perfect FU setup right here. Two strong green candles. Red candle comes in. People probably jumped in on puts right here, and then they pop. This is a perfect FU setup right there. If you ever wanted to see one, right there. And I didn't take it, but we had these red candles right here. And when it broke below the body of this candle and right here, the FU candle, that's where I took it. I took the 43.65 puts at 8.70, and they went from 8.70 to 12.50 right there. So it ended up being a good play. Then these FU candles just are like perfect. Maybe sometime I'll just have to do a challenge just on the FU setup alone. I bet you that would probably have a very high percentage rate on wins, probably the highest, because I swear these FU setups are, I mean, they're obviously money, but they're like, I would say they're like close to, probably the closest to 100% you're gonna get. I mean, I'm not saying when you see it go in heavy because just nothing is 100%, but you know, these are pretty damn close. If I had to guess, they're like 90-95% of the time pretty accurate. So maybe I'll have to think about that. I don't know. We'll see. Anyways, yeah, so I took the puts right there. Then I took calls at 152, which is right 152 right here, right there. See why I took it here. Making higher lows, getting the ascending triangle right here. You can see draw the line right there perfectly. You can see, well, if I want me to actually draw you the lines, you can actually see it. I don't even need to draw lines. You get to a certain level, you see things without even needing to draw a line. You can draw it like this, or you can draw it like that, but that's not the way I was looking at it. I mean, this was the first setup area right there. I'll keep that right there because see, that was the first one. Then it broke below it. Then you get another one that's kind of close like this. You get kind of touching this, touching that, and it's flatlining right here. I know I get the, oops, I don't want to do that. We'll draw it straight across so you can see right there. So you get the ascended triangle right here, ascended wedge, making higher lows, and it's flatlining at the 435 area. So when it came up and tested that, this is where I grabbed the 43.70 calls at 560, and then it popped a little bit. They went from 560 to 690 in that little pop. So I don't like having all these lines on my charts because it's annoying to look at. Like I said, once you get to a certain level, you don't need to draw lines on there. So yeah, as we took calls right there, that ended up being a nice little pop. Then I went and switched to puts at 329, which is right here. 329 right here. You can see it broke higher day. It's tried to pull back a little bit, and it continued to go. Then it just made all these little consolidation candles right in here. All these little candles right here. You get the body of this candle, you get the body of this candle, then you get the wick of this one. They're all lining up perfectly. So when it broke below this 435.90 area, that's where I grabbed puts. I grabbed the 43.75 puts at 350, and they went from 350 to 590 right there. So that ended up being a good play for the day. So had a good Thursday. Friday, let's see, when I traded Israel, SPY calls over 435, which was this high up here, pre-market high. It opened red, so therefore I was looking at the call side. First green candle, first 10 minute candles green, second red. I thought about taking puts here, but I hesitated. I was like, no, I'm looking at the call side. It opened red, and SPY just has not been opening red lately. And when it does, it just likes to to go green or try to go green and pop it open. So I was thinking about puts right here, but I decided I didn't want to for many reasons. One is SPY's down, opened red about $4, and the RCT trend line is way up here, so it usually does end up getting pulled to it eventually. So the first 10 minute candle was green, the second was red. It didn't buy puts. I stuck with my thesis. As soon as it broke over the 433.50 area, I grabbed the 43.55 calls at 680, and they went from 680 to 870. So it ended up being a nice play. Then I took calls again at 1030, which is right here. You get the green candles that pull back. So once it broke over this high day candle of 40, or almost just for round up, we'll say 434. When it broke over 434, I took the 43.55 calls again at 770, and they went from 770 to 890 in that little pop right there. So that ended up working out well. And I didn't really do too much here. I took puts at 202, which is right here, this candle, and you can see why. See the bodies of all these candles right here. I know it pulled, it took off a little bit, rejected the 200 EMA, which is this purple line, but these were lined up perfectly. You get the body, and there's no body here with the wicks sliced through it, but I like the way these are lined up right here. So to me, I liked it underneath the 434.40 area. So I grabbed puts, the 43.60 puts at 380, and they went from 380 to 680 right there. But they actually went, if you held all the way through, they went to, I think like 12, 13. Actually, I think they went like $15 if you held all the way through. But to me, there was so many, the candles were getting so small. Not much really going on here. The candles really aren't that big. So I was only looking for a little bit of a dump, a dollar or two drop on this, not on SPY, but on getting a dollar or two on the puts. Maybe to VWAP, but I think that was pushing. I was more or less thinking we were going to get a push to 434. Not much of a dump, but just a little one. Then it just ended up dumping, but it stayed within the channel. I was not going to take puts down here. I thought about it, but I just kept thinking we were gonna stay in the range. Being a Friday, we're gonna have a range day, so but I was looking at the head and shoulders. We had a little bit of a head and shoulders right here. We get the left, the head, and the right shoulder. But I didn't want to take puts right here. But I did take puts at 325, which was right here. When it popped up, it came close to the VWAP, and it came back down. When it came right back down to this 433 area. That's where I grabbed the 43.50 puts at 430, thinking, okay, with the head and shoulders is forming. We get it. It's pretty defined. You get the left, the head, and you get the semi-right shoulder. It was almost complete. Once it got below, the neckline would have been 433. Well, actually, technically, it could have been 432.85, but or even 432.90. I mean, depends on how you look at it. To me, it's just an area. Anything between 433 and 432.85 would have been the neckline. So when it came quickly back down to the neckline, I thought for sure, okay, maybe it will break this range. Head and shoulders on a Friday, it's quite possible it can happen. So I grabbed it, and it just ended up being a fake out, and it ended up popping. So To me, I probably jumped the gun a little bit. I probably could have waited a little more towards 432.85 to get it, but I got a little too eager, anticipating the drop. And if the drop happened, I probably would have been chasing it. It could have been a pretty significant dropping at the end of the day on a Friday. I mean, the drop could have been a dollar, $2 drop, and I could have been chasing it. I could have, instead of getting it at 430, could have been paying 6 or 7. But I prematurely got this one, and it just didn't work out. So, but besides me grabbing it too early, I would have taken it again. So basically, I took 3 losses this week. One of them I could have completely avoided, and the other two, this one's questionable, but the other one on Wednesday, I would have taken it again. But this one, I just think I just jumped the gun a little bit too early in this one. But I probably would have taken it again if I would the same situation came up. So it is what it is. So that was the week. I could have done better, but it is what it is. You just got to adapt to the conditions, and there's just been this. The market this year in 2023 has been very, very, very tricky. I know I've had some really, really good, strong weeks and strong months, and I know sometimes people say I make this look easy, and I tell you what, sometimes it's not easy, and I struggle a little bit, and I'm not afraid to admit to that I'm struggling sometimes, but I have gotten frustrated a couple of times this year just on the action, but that's the way trading is. That's why when the market closes, I don't look at futures. I don't look at anything after hours. I don't look at pre-market. I just when the market's closed, I want away from the computer. I want away from the trading. I don't care what's being said online. I don't care what's going on in the world. I just want to just go live life, decompress, have fun. And the market, you can just catch up on it in the morning. That's what I do in the morning. I just read the news or read Twitter and see what's going on at like 9 a.m. before the market opens to get caught up on things. And I just get ready for the market that day. And at 4 o'clock, I don't care what happens. I'm out of here. And I just go do what I want to do and just enjoy life. Because if you're not if you spend too much time looking at charts, you get burnt out, and you let things get to you. You just can't let things get to you. Just get if you had a regular, normal job like the average person, when your job ends at 4 o'clock and you punch out, I mean, you're not going to sit there and hang around your work. You're going to go home. You're going to get the hell out of there and go do what you need to do. So I kind of treat this the same way. 4 o'clock, I'm done. I don't care what happens, and that's it. So that's the mentality. Just you don't want to get burnt out, because you'll get burnt out, and that's how I stop from getting burnt out, is by doing that. So I know I rambled a lot in this video. Whatever, it is what it is, and thanks for watching.